India's FDI crisis, recalibrating the startup landscape. The Indian startup ecosystem is set to face a stark reality as the country's net foreign direct investment, FDI, dropped by a whopping 96.5% in FY 2025. According to the RBI, it fell from $10.1 billion the previous year to just $353 million in May. The FDI has been on a steady sliding track since 2019. The 96% drop in net FDI isn't a retreat, it's a reset. Global capital is not exiting India's tech ecosystem, but reassessing entry points, risk thresholds, and long-term return profiles in light of shifts like AI, platformization, and digital sovereignty. Greyhound Research CEO and Chief Analyst Sanchit Virgogia said in conversation with AM. A recent Greyhound field note details how a European AI platform evaluating expansion into India halted application layer investments in favor of long-term infrastructure for AI agents. Similar trends are visible across sectors, signaling a measured and focused shift towards meaningful growth supported by AI. According to Greyhound, 71% of founders in India's deep tech ecosystem believe that investor expectations are shifting from a focus on speed to an emphasis on specificity. The slowdown in deep tech funding is not a red flag, it's a realignment. AI is rewriting the rules of capital efficiency, product maturity, and defensibility, Gogia said. Investors increasingly lean towards businesses with strong technical capabilities and the potential for scalable applications. Greyhound Research asserts that this change is vital for India's transition from merely a surge of startups to realizing significant strategic innovation. With big VCs evading the Indian market, Indian startups increasingly turn to IPOs as a strategic capital route. The Greyhound Founder Pulse 2025 reveals that 63% of IPO-ready tech startups in India actively engage with global asset managers, despite the lack of new FDI. As AI native and SAS-first companies mature, they're accessing capital markets earlier to align with global peers, Gogia said, noting that this trend fosters greater discipline among founders, who now view IPOs as a means to build with a public mindset from day one. Additionally, as FDI evolves towards strategic participation, IPOs serve as a confidence mechanism, showcasing product-market fit to institutional and retail investors. Unlike before, Gogia explained that 64% of surveyed AI startup leaders noted that investors are asking more focused questions about explainability, computing economics, and policy alignment. This change has led to fewer term sheets, but improved founder-investor alignment, allowing promising ideas to connect with suitable long-term capital partners. India's tech IPOs are rising not because funding dried up, but because founders are diversifying their capital stack. In the face of recalibrated FDI and late-stage VC caution, IPOs offer strategic liquidity and brand elevation, Gogia emphasized. Greyhound Founder Pulse 2025 has found that 57% of founders choosing to pursue IPOs consider it a strategic decision to align capital with public visibility, particularly within the enterprise, SaaS, and fintech sectors. The CEO added that this approach should not be seen as a substitute for foreign direct investment, FDI, but rather as a complement to the evolving landscape of India's capital markets. In another example, according to a Greyhound field note from a Mumbai-based enterprise automation company, the leadership team characterized their IPO as a growth enabler, not an exit strategy. The listing facilitated new CXO contracts and assisted in recruiting top tech talent. While compliance burdens increased, so did credibility. The company continues to attract global interest, not because it went public, but because it proved it could perform publicly. This is the kind of maturity FDI investors are watching for, and will likely reward in the next cycle, Gogia concluded. As quoted in Analytics India magazine, in an article authored by Smriti Nadig published on June 2, 2025. Beyond the media quote, our view in full. Press for time? You can focus solely on the Greyhound flashpoints that follow. Each one distills the full analysis into a sharp, executive-ready takeaway, combining our official standpoint, validated through Pulse data from ongoing CXO trackers, and grounded in field notes from real-world advisory engagements. FDI decline in Indian tech is not an exit, it's a recalibration. Greyhound Flashpoint, the 96% drop in net FDI isn't a retreat, it's a reset. Global capital is not exiting India's tech ecosystem. It is reassessing entry points, risk thresholds, and long-term return profiles in light of shifts like AI, platformization, and digital sovereignty. Greyhound CIO Pulse 2025 shows 58% of global CIOs operating in India are rebalancing tech investments, favoring scalable, defensible models over generic growth. At Greyhound Research, We see this as a natural recalibration that occurs when a market transitions from high growth to high discipline. Greyhound standpoint. According to Greyhound Research, global tech investors are reorienting toward precision. India's digital landscape is no longer in its infancy, and that maturity brings heightened scrutiny. What was previously fueled by broad market optimism is now governed by deeper questions. Will AI infra deliver localized performance? Can sovereign cloud models support cross-border business needs? Is return on innovation measurable? These are healthy filters. This phase of recalibration ensures that future foreign capital is not just abundant, but aligned, strategic, and patient. Greyhound Pulse. Greyhound CIO Pulse 2025 finds that 63% of international decision-makers are shifting tech capital in India from generalist bets to targeted domain plays, especially in industry-specific AI, digital identity, and automation platforms. This refined approach reduces noise and creates room for solution maturity. It's no longer about how much capital flows, but how effectively it compounds into trust, capability, and IP. Greyhound Field Note. Per a recent Greyhound Field Note with a European AI platform evaluating India for expansion, the executive team restructured their investment thesis from front-end app builds to a long-term AI agent infrastructure play. While this meant a temporary pause in capital deployment, the team confirmed this recalibration resulted in a 3x improvement in strategic clarity. We're seeing similar realignments across sectors, not a loss of conviction, but a deliberate pivot toward meaningful AI-backed growth. AI reshapes deep tech funding, from growth at all costs to outcome-backed capital. Greyhound Flashpoint. The slowdown in deep tech funding is not a red flag, it's a realignment. AI is rewriting the rules of capital efficiency, product maturity, and defensibility. According to Greyhound Sector Pulse 2025, 71% of founders in India's deep tech ecosystem say investor expectations are shifting from speed to specificity, favoring ventures that show technical depth and scalable application. At Greyhound Research, we believe this transition is essential for India to leap from startup proliferation to strategic innovation. Greyhound standpoint. According to Greyhound Research, deep tech in India is no longer a side story. It is becoming the spine of strategic technology growth. But that also means the capital it attracts must match its complexity. Generic venture models are giving way to specialized instruments, industry partnerships, and long-arc funding models. AI, semiconductors, and advanced compute ventures require more than valuation. They need credibility, proof of value, and deep domain grounding. This moment signals a refinement, not a retreat, one that will serve Indian innovation more sustainably. Greyhound Pulse. Greyhound Sector Pulse 2025 finds that while early-stage funding velocity has slowed, quality-adjusted capital is improving. 64% of surveyed AI startup leaders say investors are asking sharper questions around explainability, compute economics, and policy alignment. The result? Fewer term sheets, but stronger founder-investor alignment. This shift is helping high-potential ideas escape the noise of fast funding cycles and find the right long-term capital partners. Greyhound Field Note. In a recent Greyhound Field Note with a Hyderabad-based GenAI tooling company, the founder shared that although inbound investor interest dropped, the team secured a global strategic investor after shifting focus to inference optimization and cost governance. What appeared like a capital crunch was actually a capital correction, one that rewarded architectural rigor over pitch flash. Similar outcomes are emerging across AI-first ventures in defense, pharma, and advanced manufacturing. India's tech IPO boom reflects capital innovation, not desperation. Greyhound Flashpoint. India's tech IPOs are rising not because funding dried up, but because founders are diversifying their capital stack. In the face of recalibrated FDI and late-stage VC caution, IPOs offer strategic liquidity and brand elevation. Greyhound Founder Pulse 2025 finds that 57% of founders opting for IPOs see it as a deliberate move, aligning capital with public visibility, especially in enterprise SaaS and fintech. At Greyhound Research, we view this not as a substitute for FDI, but a complement to India's maturing capital markets. Greyhound standpoint. According to Greyhound Research, the IPO wave in Indian tech is not about urgency. It's about optionality. As AI native and SAS first firms mature, they're choosing to access capital markets earlier to align with global peers. While this compresses timelines, it also creates greater discipline. Today's founder doesn't view IPOs as a finish line. They're building with a public mindset from day one. As FDI evolves into more strategic participation, IPOs serve as a confidence mechanism, proving product market fit to institutional and retail investors alike. Greyhound Pulse. Greyhound Founder Pulse 2025 reveals that 63% of IPO-ready tech startups in India are actively engaging with global asset managers, even in the absence of new FDI. These founders are using IPOs to attract long-only capital, strengthen governance, and internationalize their investor base. This trend reflects a shift from dependence to diversification, a move that ultimately strengthens the resilience of India's innovation economy. Greyhound Field Note. Per a Greyhound Field Note with a Mumbai-based enterprise automation firm, the leadership team described their IPO as a growth enabler, not an exit path. The listing unlocked new CXO contracts and helped recruit top tech talent. While compliance burdens increased, so did credibility. The company continues to attract global interest, not because it went public, but because it proved it could perform in public. This is the kind of maturity FDI investors are watching for and will likely reward in the next cycle. Analyst in Focus, Sanchit Veer Gogia. Sanchit Veer Gogia, or SVG as he is popularly known, is a globally recognized technology analyst, innovation strategist, digital consultant, and board advisor. SVG is the chief analyst, founder, and CEO of Greyhound Research, a global, award-winning technology research, advisory, consulting, and education firm. Greyhound Research works closely with global organizations, their CXOs, and the board of directors on technology and digital transformation decisions. SVG is also the founder and CEO of the House of Greyhound, an eclectic venture focusing on interdisciplinary innovation. Copyright policy. All content contained on the Greyhound Research website is protected by copyright law and may not be reproduced, distributed, transmitted, displayed, published, or broadcast without the prior written permission of Greyhound Research or, in the case of third-party materials, the prior written consent of the copyright owner of that content. You may not alter, delete, obscure, or conceal any trademark, copyright, or other notice appearing in any Greyhound Research content. We request our readers not to copy Greyhound Research content and not republish or redistribute them, in whole or partially, via emails or republishing them in any media, including websites, newsletters, or intranets. We understand that you may want to share this content with others, so we've added tools under each content piece that allow you to share the content. If you have any questions, please get in touch with our community relations team at connect@thofker.com.